Now, I'm not going to go too into depth on the first video, as it is my first video doing supply and demand. I'm just going to go over the basics of what is supply, what is demand, and how to find it when you're on the market, okay? Now, in the near future, we will go into looking at finding out how to refine supply and demand, spotting fake zones that are sitting on liquidity, and really just spotting the correct zones that you want to take orders from. So first off, we're just going to start with taking a line chart. We're going to go with just drawing out a supply zone, okay? So we're going to come from a high, we're going to put in a low, and we're going to put in a higher low, a lower high, and then we're going to put in a lower low, okay? Now, we'll leave that here, okay? So if you look at this move here, we've got this as a down move, all right? Then this is an up move. Now, supply in this area would have been what caused this down move. Okay, so this area here would have been our supply. Now, you can't really see the actual zone on the line chart, but this is just a brief example of where supply would sit in the market, okay? Now, if I mark this, we'll mark it as our supply zone. So this is our supply zone, okay? Now, for a supply zone to be formed, you'd have to have an up move before a down move, okay? So imagine if we had this as an up candle, imagine it was coming up, we had some up candles, up candles, up candles, and then here, and then we've got this last up candle, okay? It's not really marked exactly on the point. Let me just move this to make it easier to... On the last up candle would be where we marked our supply, okay? Now, for the down move to happen, there has to be a lot of sell orders coming in the market, meaning they would be leaving behind orders that haven't been filled, okay? Now, what we expect to happen is for price to come down, coming back up to mitigate more orders before then pushing price lower. Now, in that process, you could find out there would be inefficiency below these zones. Now, this is what makes a valid zone for me. If there's inefficiency below the zone, that's a valid zone for me, okay? Reason why is because that means there would have been a lot of orders coming into the market at that time. There would have been more orders than buys, leaving a gap, which is inefficiency. Now, this gap will have to be filled at some point, as we know we don't want gaps in the market. Now, it doesn't always have to be filled instantly. It could be filled in the near future, but more time, if you're trading on the 1 minute time frame like I do, you expect price to come back up, clearing the inefficiency just before tapping into your POI, okay? So for supply zones, you want the last up candle before the down move as marked out as your supply zone. This is where you'd expect price to be heading, and you'd expect inefficiency below it as well. Now, if we jump over to do demand, we'll go from a low to a high. So we'll go from a low to a high, to a higher low, to a higher high. And as we're coming back down, actually we'll mark this zone here like I did last time, okay? So now imagine we had a down move coming down like this, with these candles. And this was our last candle. That wasn't that clean, but this was our last candle. We would mark this zone here as our demand zone. Reason why? Because it's the last down move before the up move, okay? Now, this is where the sell to buy happens. Same as here, this is where the buy to sell happens. Now, we would mark that zone expecting there to be we would only mark that zone if there was inefficiency above the zone, because this showed us that a lot of buy orders came to the market at the time, meaning that we could expect price to come back, clearing this inefficiency, adding more orders before pushing price even higher, okay? Now, this would be our demand zone. I'll mark my demand zone as blue. There you go. So just to make that clear, on supply, you would mark the last up candle before the down move, okay? And on demand, you'd mark the last down candle before the up move. Now we're going to jump over to a candle chart. This will make it a lot easier, a lot more visible for you guys to see. And we'll just go out marking some supply zones and marking demand zones and marking a bit of inefficiency. I'll explain more what inefficiency is when you can see the candles, because it's easier to tell inefficiency when you have 3 candles in front of you, so you can see the gap and where it doesn't meet. And then we'll just go over marking them out and seeing if price comes back, mitigating these areas and respecting the demand, or if it carries on and trades straight through these areas. Okay guys, so now that we've just been over supply zones and demand zones on a drawing, we're going to jump onto the live chart like I have done. I'm just going to enter, well not enter, we're just going to look at some supply zones and some demand zones. We'll mark them out to just kind of show you what I mean when I say what a supply zone is and what a demand zone is, okay? So as you can see here, for those of you that watched my last video, this will make it a little bit clearer. We have a break of structure here. Price breaks this zone, and then this here is a demand zone, okay? It's not a demand zone that I would choose to take a buy from, but what you can see happens here is this demand this last down move before the official up move gets broken, causing a shock to the downside. We can do a shock supply here, as it's a, there you go. Okay, so this demand zone gets broken to the downside. What breaks that demand? This zone here, okay? Now this is a supply zone, guys. This is where I'd mark my supply zone from. Why would I mark this zone? Like I said on the like I said on the drawing earlier, the last up move before the down move is where we'd mark supply, okay? Now there's a little bit of inefficiency here, but this is more of the supply zone that's caused a change of character, okay? So we'll just mark that. Let me just change that so it's a supply zone to make it easier. No, as you can see, I don't want to be doing that. Let's take that off the screen. As you can see, guys, price does come up, tapping back into this zone, and then trades off. Now, if we just follow a bit of price, we'll be able to see that supply and demand is everywhere in the market. Now, as you can see again here, this is the last up move before the down move. Price comes down, comes back up, tapping into this zone, okay? We could do the same thing again here. This is the last up move before the down move to break the structural low. Same as this low here. And as you can see, price comes back up to mitigate this area, okay? Now we can look at this area here. So this area here, this last up candle here, is also a supply zone, and there's inefficiency below this zone as well. I will go over inefficiency in a second. Does price come back up? Price does come back up filling this area, but does it get respected? No, it trades straight through, okay? And as you can see, we can go to the band now as well. Now, this zone here is what put in this high. Does it get respected? Yes. Now, this is a demand zone. This is the last down move before the up move, okay? Let me just mark that as demand so it doesn't say grey. Demand zone. Now, that's really, guys, how you mark a supply zone. So that's how you mark a demand zone as well, but that's how you mark a supply zone, okay? So the last up move before the actual push down will be your supply zone. Sorry, the last up candle before your push down will be the supply zone. That's where you mark your zones, okay? Now, you don't always have to mark the last one because price doesn't always have to come up and mitigate the origin, but you can use those factors when you see when price gets filled. So sometimes the origin may get filled. Now, when a supply zone gets filled, I can see we can spot on them and we can just explain what that is, okay? Now, you see this zone here that actually mitigated into here, okay? Now, this is that zone, okay? This is the last up move before the actual down move. Now, as you can see, as you can see, this candle here comes down, but actually taps back into it before leaving, already filling this zone. And then that's why price doesn't come back up to mitigate this before making its move down. Now you can see here, this zone here does not get mitigated. It also leaves an efficiency. That's also another example as why price doesn't always have to come to your zone. So it's about picking the right zones, really. Now, if we jump over and try find some demand zones, and we'll mark some demand zones, okay? And we'll go over them as well. Let me look for, okay, this zone here looks pretty nice. We can mark this. This has got inefficiency as well. So now I can also explain inefficiency to you guys as well. Now, for demand zones to be put in place, it's the last down candle before the push up. Now, if I mark this zone here, this is the last down candle. What you can also see here is what I mentioned on the line chart earlier. Well, not the line chart, the drawing I did with the lines. That this is a zone for me that I would be strongly into picking to trade from. Reason why is because there's a lot of inefficiency above this zone, meaning at the time of the market, a lot of buy orders would have came into play to be able to push this up the way it has. Now, as you can see, so this is the first candle, this is the second, this is the third. Now, to mark inefficiency, you go from the top of the first candle, like so, and then you go from the bottom of the third candle, okay? Now, this is where the price doesn't meet. So this is the gap in the market, okay? As these candles don't meet in price, like you'll see all here, price is meeting, price is meeting, price is meeting. Down here, price meets. Like every wick will touch a wick and meet to not leave a gap in the market. But here, as you can see, there's a gap and known as inefficiency, or it could be known as imbalance. Depends what you want to call it, really. But we'd expect price to come down in the near future, clearing this inefficiency and actually tapping into this demand level. collecting more orders before pushing any higher. Now if we drag this across, I'm not sure, but I'm pretty certain this would come down and get mitigated and maybe tap into this zone. Okay, yes, we definitely tap into it. As you can see, that is a perfect tap. That would be a very nice entry. Now myself, I wouldn't enter straight away. There's other consequences to my strategy, but as you can see, the zone was picked perfect and we could have got a nice entry from there. But as you've seen, guys, that is the basic for supply and demand. Now, as I said at the start, this video isn't going to go too into depth. What I have done is gone over how to actually spot supply zones and how to spot demand zones. In my next video, I will go more into depth into supply and demand and how to refine your entries, how to spot zones that are sitting on liquidity so to not to place orders from, and also how to spot zones that you want to take orders from. But that's it for this video, guys. I hope you enjoyed it. If you have any questions, you can drop them below in the comment section. I will reply to all those questions. And if you like the video, guys, please drop a like and subscribe. I will be posting more frequently, so you will get to see videos from me. My next video, I think I'm going to do chalk and flip, and then after that we're going to go back into supply and demand. We'll be looking at how to refine supply and demand areas and to get the nicest entries with a small stop loss. Now, for those of you that don't know, I do have a mentorship. That is a full smart money trading course and an amazing community. Now you'll find the information on that below. There'll be a link from my website. You can click on that link and you can go from my website and all the information is there. That's it from me.